Tesla's stock is crashing, JP Morgan had record profits, and of course the stock market made it past 5,800. Are we going to see a huge squeeze? Well, in today's video, we take a look at why the bears have completely disappeared across the board and how this could be shaped by things such as NVDA as the latest sentiment survey results come in. We're looking at dark pool liquidity, huge transactions, a massive stimulus check potentially coming in for China, and of course, the awakening of a giant once again. Someone just got seriously liquidated. Let's talk about it in our special weekend edition, Stocks, Commodities, and Cryptos, coming up in today's show. Well, welcome back everyone to the special weekend edition of The Daily Show. We're covering everything from stocks to commodities to cryptos. And of course, as always, we'll be going through the macro, the lead indicators, and the hottest charts. But let's begin with the story of sentiment, because yes, it's long live the bulls, the bears are dead. Sentiment results coming in at one of the lowest reads we've seen in over 12 months when it comes to bearish respondents. And this brings up the question, should we be getting concerned about this? Well, as we know, it all comes back to the bull-bear spread, and we're getting to a point now where we're almost tapping into that 30% margin switch. Now, whenever we get this, we know that we have to be ultra cautious in markets if you're worried about small pullbacks. And in today's video, we'll look at the good, the bad, and the ugly right now for markets. And we'll start off here with the good news for people that are looking at the bullish end, and of course, going towards the multi-months into the end of the year. First up, it's global liquidity. We know global liquidity is on the rise, and we've been talking about this now for months on the channel. We're in a liquidity process where all central banks around the world are trying to keep these economies alive as long as they can. And you'll see here that actually the S&P 500 is pretty much tracking across the board what's going on right now in the markets. Now, when it comes to the Goldilocks situation that we're in, it's almost every indicator is absolutely flashing green. And whether that's lumber gold, all the way into something like Citi's Economic Surprise Index, or even credit spreads, we are basically seeing a perfect scenario for market bulls. Now, should you be cautious of these? Yeah, sure. You might want to pay attention to the overall price action. But in general, everybody's upgrading across the board, and this is already coming into this earnings season. Retail sales from Bank of America are actually getting upgraded as well, showing that they believe the American consumer is strong, and GDP has now exceeded the expectations for 3 quarters in a row. So with the central banks such as the Federal Reserve doing a 50 basis point cut, you can already see why the market is starting to get even more hyperactive into the end of the year. So let's just quickly talk about CPI, because unfortunately we weren't able to make a video post the event on this one. We usually do, so make sure to subscribe to the channel this earnings season, because it's going to be a very good earnings season, I think, for traders. But have a look at this overall CPI number. Basically in line with kind of what people were expecting. It was technically okay, but again, the same problems are there. Now, shelter admittedly was much better, but have a look at services. Services less energy services are sticky, and transportation services are extremely hot, running at a 1.4 ratio. Now, this is not what you want to be looking at in terms of percentage increase. It's basically showing us that we're moving from the first signs of inflation to the second problematic points. And this is why when you're looking at market-based inflation expectations, they're starting to rise back up, even though the Federal Reserve, of course, is saying, we've beaten inflation, don't worry about it. What is this really leading into? Well, it's leading into potentially the metals trades. And we're not talking about gold or silver really from this aspectation. We're talking about iron ore and many others that we've been focusing on the channel, thanks to, of course, China's stimulus. Now, this will be an important story for 2025, we believe. And of course, you'll want to be watching, because at the moment, as we've shown with the 1970s overlay, we're kind of like here. And if you look at the 1970s, that's where it was. This is around the point where we started to see a spike back up in inflation, then it stagnated, and then of course it went ballistic, causing the Federal Reserve to do a second hiking cycle and of course admit its mistakes. But for now, do we see that in the market? Well, bonds definitely don't. Credit spreads across the board are basically just going down into the ground. And this basically means that no one sees risk in the markets. And of course, coming into this US election, it seems to be the calm before the storm. Is there any volatility? Not really, not what you'd usually expect, which we can show in a moment. And we're also not seeing that standard late September into October sell-off that tends to happen with the data. And as we always mention on this channel, it's number one, TA. Did we see TA go bearish at any point where it broke underneath key levels? No. So for now, what's happening? The bulls are in control and they continue to push this market into positive gamma style situations. The real question then becomes is, should we be worried about this factor as well? The S&P 500 is making all-time highs. I believe it's 45 for 2024 so far. And the volatility index is super high. It's actually an outlier at this point. And this is a good chart here from Gamma Lab that actually shows you the overall expectations of the market and what's really happening. 1 month realized volatility is not very high, yet 1 month implied volatility, this is based on, of course, people taking hedging and what we've already talked about in vol structure is much, much higher. So will we see at any point, let's say a click of a finger and a sell-off? It is possible for October, but as we've talked about before, even if October did turn negative, because the first 9 months of 2024 have been so overwhelmingly positive, the stats are in the favor for the bulls for the end of the year. And this comes into, of course, the soft landing or no landing narrative after the Federal Reserve's cut. Now, a lot of people don't want to hear this. They all say the economy sucks. You know, we hear all these data stats all the time. But the reality is that this still is the most likely scenario. We've spoken about this recently. Effectively a 3 month and 6 month forward that could be very positive. And you can see here with FundStrat's data that on average, if market structure continues to hold quite strong to the upside, and that's really what's most important, that in general, markets will remain relatively bullish into 25. And it's really more of the same of what we've been talking about all year. We don't feel like there is a massive crash happening into the early parts of 25. If a big crash is going to come, it's more than likely going to be in the back of 25, even into 2026. And this has been fairly consistent on the channel because, of course, we talk about this all the time from the expectations of what everybody has out there. Remember, you don't get a big crash when everyone's calling for it. It's generally when you get these Goldilocks style situations run out for a while and everyone says, guess what, guys? We fixed the system. We'll never crash again. And that's, of course, what we are going to be looking for into the future. Now, in terms of general recessions, if you're going to have one, we should have already had it. From a first Fed hike, 27 months until recession is normal. That would generally put us around June of 2024. From the last hike to a recession, usually it's around 9 months. April 2024 would have been when they shown. And of course, as we know, 3 month structure is going to be one of the most important things that we need to be watching, which is to be determined at this stage. But of course, the markets are looking relatively bullish. So it doesn't look like we're going to be following the standard recession path. And I don't think any of us probably expected to be following the same as always. If it was that easy, then everyone would be doing it. Instead, what we need to be looking at is what are the opportunities now? What should we be cautious for in the future? And of course, do we have reads on what is worrying us in the markets? And at this point, of course, if we are going into a soft landing, these are technically the sectors that tend to do best. Guess what one of them is? The financial sector. And of course, we saw with JP Morgan, their earnings were pretty good. And what we're already starting to see is the signs of debt being written into the markets as well. As a 50 basis point cut helps people refinance. It helps people say, oh, I might want to take on some debt, maybe even start a business. All of these things are becoming record highs. We showed a chart recently that actually showed more people starting businesses now than just before, guess what? The global financial crisis. This is the type of thing that you usually would expect to see, but these are cool charts and certainly well worth paying attention to. Now, are we in a slow cut or fast cut style cycle? Of course, we talked about the 50 basis points versus 25 basis points concepts of the Fed, and they came out and they basically said, hey, you know what? You expected 25, we're going to do 50. The Fed's here and we're going to do whatever it takes to make sure this economy does well. That's basically the message that they were sending to the markets. And we've already talked at a long time here for the 50 basis points and why it wasn't as bad as, of course, we would have expected. Mostly it was down to market structure and not having other reasons. Remember, if you have, let's say, 7 reasons that you believe a market crash could be predicted, but only one of them is showing, that's not enough to go off. And in this case, of course, 50 basis points was certainly not enough. Slow cycles would mean that we are looking at 25 basis point cuts from now on. Again, 50, we'll have to take that with a grain of salt, but it looks like the expectations of the market are starting to go back to 25 basis points because inflation, while looking good, I guess, also looks a little bit bad. And they're going to probably weigh it up and go for the 25, you would have to think. Now, we had a great seminar. It was amazing to see so many people in Melbourne, and we got asked the question quite a lot, what about the geopolitical tensions in the world? I'm concerned about these. What are the investment assets that I have to look at? And of course, where generally do we see big moves? And the answer really comes back to this chart here from Bank of America that we've shared before. And what it shows is it shows gold and of course oil, which you would have to expect to be the big ones in terms of moves. These are the ones that tend to do, of course, the best over a 3 and 6 month period over these geopolitical tensions. Now, I don't think gold's going up just because of any of these terrible things that are happening in the world, but realistically, these are the kind of moves that you would expect from those markets. And we already know gold is on a flyer. If you haven't watched this channel before, you might not be aware that since $1,800 an ounce, we have loved gold. And of course, I've loved it all of 2024, along with utilities, and just recently we switched to being short-term bearish on utilities. Why? Because it was overbought. But in general, gold is still, in our opinion, undervalued. And why is this? Well, it comes back to basically look at this. Gold spot price is going ballistic, but total ETF holdings are not coming back up with it. And what you might notice is that in serious runs with overall what you would kind of expect gold runs, generally the ETF flows come in near the end of the runs. So it's not that unexpected to see ETFs not come along with the party. It's central bankers that are buying it, China, India, Russia, BRICS nations. Plus, on top of that, a lot of other big fund managers are getting into gold because they're looking at it as undervalued over the last 20 years. Remember, they're taking into account the long-term averages of this particular metal. Now, let's go over to, let's call it online gold. Bitcoin, yes, it is ready for a big move. And you know the interesting thing? Someone just got massively liquidated. But as we see here from Jason Gottfried, we have an ADX line that is basically in the dirt. And what this is showing us is that a big move is just around the corner. Whenever we've seen these types of reads in the past, a big move, whether it was down or up, was about to happen. And this is a really cool read because it basically says it's like the calm before the storm. Now, we've been mentioning recently that someone got super liquidated. Unfortunately for somebody, they went super leveraged. And of course, now that we're in the days of ETFs and synthetics inside of Bitcoin, what does the market like to do? Well, slaughter them. So yes, basically that person just lost their position about 24 hours ago. And unfortunately, I wasn't able to make the video due to some software glitches, but I was sitting there saying, oh, this looks pretty good on the Bitcoin market. And since then, Bitcoin has already started to rally. Will it continue to do so? Let's have a look at the charts very soon. So we mentioned earnings season kickoff. Remember, Monday is a bank holiday. The stock market's still open. I believe the bond market is closed. But we do start off with Tuesday, more banks. Wednesday, more companies, banks, all sorts of things, including Morgan Stanley. And then we get into the chips. Then we get into Netflix, the first of our big tech companies coming out. This week will be important for earnings season. As we know, markets love to be optimistic into earnings, and so far they're doing it with the banks. The banks seem to be running along with that. But will semiconductors come along with the party? We know transactions are coming through. Dark pool, dark pool, dark pool, all over the highs here. Semiconductors getting massive trades within the range, and this is kind of unusual. We just don't see this much leverage generally coming in around these highs. And we haven't seen a breakout yet on semis, but of course we have seen it on NVDA. So there are a lot of trades there. And another one that we just kind of reported on in the last video, and again, I had this chart for yesterday. I was unfortunately not able to put it out, but this shows you MSTR. Now, guess what went ballistic over the last 24 hours? MSTR. So it just shows you again, when you get these large transactions, when you have flows breaking through key levels, and MSTR had been in a big sideways for a while, things can happen. And of course, in this case, it was a pretty good precursor. Let's now jump on over to the charts before we look at the options. First up, S&P 500, 5,800 plus. Wow. Gamma squeeze. Yes, absolutely. Like we mentioned in our last video, At the moment, the markets are just saying, you know what, I want to be bullish. There's no bearishness yet to it. But whenever we do see this read here, and I've mentioned this before, and we were right last time as well, that whenever we see these kind of stop signs, and this is part of the indicator I have, basically it just tells you to be a little bit cautious over the next coming weeks. Now, you'll notice here that we generally see 2 weeks up, and this is pretty normal. If you look at it here, this one sold off a little bit. This one here took 2 weeks. And we've kind of shown in the past, about 2 weeks after some of these reads will be like either sideways or even down. So I think what that's telling you is you don't have to feel too much FOMO in this market. Even if you're thinking, oh, I've got to be in. S&P 500 probably going to at some point return back down to these prices, if not at least, the 56, kind of 5,700 mark. If we ever get under 56.75 again, of course, that will therefore be bearish and the markets will then start to move towards better levels, let's say 5,500 or 5,600. And that's, of course, what the bears will be looking for. But I think whatever we get here in October, remember the stats are going to be overall bullish in terms of market action. The real teller, and this is something we did in our live group together when we looked at the Thursday open, was to really recognize, and Wednesday open as well, was to recognize the wicks. We saw the wicks, we saw the daily 20 moving average, we saw this bouncing happening over here. And once that occurred, it was a good chance that the bulls were in control. So that's why we're seeing that big movement. But really it comes back to, of course, the options. Let's have a look at the options here. And you'll notice that it's all about this 5,800 level. It keeps coming up, 5,800, 5,800, 5,800. And we're above that at the moment. So if the market's holding above that, if we see, of course, good earnings coming out, then this market's going to try to push to 58.75 or even 5,900 relatively quickly. You can see here the positive gamma flow. And as we've talked about, this is a very important aspect of the markets nowadays, thanks to zero DTEs. 58.50 is a big strike for the upcoming week. And then, of course, by the end of the year, you might be aware that Goldman Sachs and others are all calling for 6K. Well, guess where the number one call level is? You'd be right when you say 6K. So it looks like markets are trying to push higher into the end of the year. And at this stage, they're in that positive gamma. CTAs have also been buying. They're super behind price, which is kind of the common phenomenon since August of what we've seen on these charts. And when it comes to other big banks and institutions and just in general stocks, take a look at this. We have here a massive expiration coming in 220 for JP Morgan, and that's of course into positive gamma as well. So basically JP Morgan was pushing through its call walls after the big news announcement. So it looks like the markets across the board really enjoyed that financial move, and I wasn't surprised. I mean, basically we talked about this. We expect the banks to continue to do well. Why? A little bit of deregulation concept, but also because in general, it is just about debt, and people are having to take on debt to live in the current society the way they're wanting to. And that's really the story, I think, of 2025. NVDA here, nice move, 134.80. It's not quite through that 135 structure to get into the big kind of positive gamma. We know 140 is going to be a big level for the upcoming week. Why? It's that all-time high. And at the moment, NVIDIA closed strongly on the week. So we'll look at that in a moment, but things are good. Where things aren't so good, though, is Tesla. Wow, that was a big sell-off. And it was certainly that buy the rumor, sell the fact. Although the sell the fact came in before the event itself. People were just maybe not impressed with the timeline. Who knows what people weren't impressed with the Tesla stuff. And in general, the market got tanked, moving through 230 and quickly going into the 218 kind of level. Around 210 to 215 is where you would have to expect buyers to recommit onto Tesla. And that makes sense when we look at the charts in just a few moments. And there is a key level around there, including an anchored VWAP. Let's now jump into the early predictor charts. Do we see anything that's a little bit worrying? Well, we mentioned before that the bonds market in general isn't that freaked out, but it is starting to come off its low here. And you'll notice that we're getting a little bit of an uptick in concern from the bonds market. We know the VIX is elevated. We know the VIX could basically at any point in time show some volatility because it's unusual to be at all-time highs and at the same time to have high VIX and volatility underneath the board. And this just means that it's a standard election year from that aspect. People are still concerned. There's a bunch of hedging that's gone through, and we'll have to see what happens next. High yield junk, on the other hand, though, continues to be relatively good across the board, and it's still in a series of higher highs and higher lows. So there's no real caution in those lines. When we move over to the US dollar, we know it's at resistance. We know that this was a super hit level. If you've been in that trade for the last week, well done to you. I'll give you a clap because it was a pretty good trade. Very replicable, good area, excellent TP zone. And now we have to see what happens. If the bears are going to control it, underneath 102 this week will be a weakness point, I think, for the dollar as we're at resistance or supply. And if the market starts to consolidate and then breaches up, well, of course, that's going to be bullish, and we can talk about that when it happens. If we have a look at XLF on the chart, look at this breakout, ascending triangle here, big break thanks to JP Morgan. And again, if banks are doing well, that is not a bad thing for the markets just yet. KRE also starting to push up here with the preliminary kind of overall bank moves. And you can see that it's trying to get into that 59.60 level. These are regionals. If they break out as well, again, it's looking relatively bullish. XHB, which is of course the home builders, that's also looking generally an overall bullish kind of trend. And as we mentioned in our seminar, which I did this week where I talked about my 2025 kind of concepts, really, if home builders has been doing well, which it has been all year, you can't be net bearish. And this is why when we had that August live stream where the market looked like it was tanking because of the Japanese yen and the carry and all of that type of stuff, we said, well, what are you going to do about it? What are you going to do about NVIDIA being at $95? Because you said you wanted it, and then it's now here. Are you going to make a decision, or are you going to remain scared? The question is, did you look at the risks and understand what they were? And in this case, of course, it was literally a central bank doing something. The market didn't like it. Then it kind of reversed it. Again, I think it was all an excuse to really liquidate people. But regardless of that, we did have those moves. Let's talk copper now. There is a little bit of hype and anticipation about a big stimmy package coming back in for China. I don't know if it's going to come out, but it's expected on Saturday this week. And if it does come in, of course, it could help the metals. So things like copper, iron ore, etc. are already kind of reacting to that a little bit. Not really an easy kind of trade here for copper. Of course, we've been looking for 432. Still think that could happen. The main market that was actually getting an easy trade was gold. And a lot of people that have done our day trading masterclass messaged me and said, I'm in gold. Is that bad? And I said, no, it was actually a really good trade. There was an excellent position. And to me anyway, I think 2647-ish, which is like literally here, that is a very cool TP zone. But a lot of people, of course, are going to try to hold gold higher, especially if you've got that multi-month plan you thought was good. This was a classic, an absolute classic setup from that particular course. But regardless of this, what is gold doing? Well, as we know, we expected it a few weeks ago to go into a pullback in time or even a correction move down to 2560. I like 2560, of course, from a better swing level. Of course, we're still long gold. We like gold. We love the stuff at the moment, and we think it's going to go higher. But I'm not sure if that's exactly a breakout just yet to really bring us that 2800 or 2750 Christmas cheer. At the moment, gold, yeah, it's doing well, but I think it's had that first initial impulsive move. We'll have to look for more structure. What about silver, though? Well, silver could be an opportunity on the horizon. Again, if we see stim packs from China, silver is not only a precious metal, but it also comes through as a bit of a inflation-based metal, and also, of course, it's used in real workplaces and stuff. So in this case, silver is still in consolidation. We'll look for breaks through 3220. If we get it, 3460 could be on. And of course, silver is that sleeping giant in terms of ratio to gold. What about oil? Another nice trade, another nice replication here. Oil actually did more what we thought. Came down to around the right levels. You can see here the resistance becoming support, the daily 20 moving average, which was respected for a little while. It got that nice kind of wick off that, and it started to rip. Now, the thing with oil is it's moved through a very key downward trend line. So it's kind of moving towards that bull end. We were correct into the first move together. Well done, guys. And now we've seen the pullback, which is kind of cool. And now we've seen the kind of, I guess you would say redemption of that pullback. The market is starting to say, you know what, I might want to go a little bit higher. The question now, can we get through 78 a barrel? If we do, 80 or even 84 a barrel are very open. So oil remains still a good day trade. And actually just on oil, a few people in our community, have been mentioning and getting into things like ZOM. You can see here a pretty nice trade that I've just got outlaid. Now, this one actually hit profit target already, but the point is that if you look at XLE, which is the energy sector, it has broken through downward trend lines similar to oil, and it has been on the improve. So this is one of the worst performing sectors. And if you actually go XLE versus the SPY, which of course shows us whether energy is doing well, it's broken out of some downward trend lines as well. So things have been improving for the energy sector in recent months. Now, depending on the election, that one could move very differently to, of course, something like solar. So keep that in mind. Let's move over to Tesla now. Oh, it's not so good. That wasn't great, was it? But 210 is now the big level for the week. Anchored VWAP, key little bit of support. Obviously, the market's coming down like it's crashing basically. And yeah, this is not exactly what a Tesla hodler would want to see, but maybe people like that particular event. Personally, I think that whatever that prototype was of the giant van, I don't see how that would work on American roads when I was there, or Australian roads for that matter. The clearance wasn't very high, was it? But either way, I understand it was just made for something in Vegas. And generally speaking, it was a pretty cool to see these types of things. It reminded me a little bit of like those Star Wars droid machines or something like from the first episode. I was like, when the door opened, I've got to be real, I expected Optimus robots to come out. Did anyone else think that in the comments down below? And I kind of thought they'd be holding guns or something. I don't know what was going on. But regardless of this, Tesla, it was selling off. 210 is a key level, and we'll have to look for structure around that point. We'll keep updating on flows as we see them. NVIDIA 134.80. Yes, this was a key level. Yes, it didn't get through 135, but you've got to like that NVIDIA has been able to hold this bullishness, and it closed at a pretty nice level. This is telling us that even if we do get pullbacks during October, look, semis are looking okay, and things are starting to point towards an all-time high here for NVIDIA. And of course, as we've said, the pullback in time that had to happen, the correction that had to happen, now we'd like to see these lead. And if they do lead, that's strong. Semiconductors pushing into the 257 mark. We know a 260 plus break is significant for semis. And we can see here that they're trying to get through with that big data and, of course, flows. Speaking of flows, MSTR went ballistic, up 16%. I'm not really surprised by this. We talked about it in our previous video. I don't ever talk about MSTR, as you know. And then we bought it on because all of a sudden I was like, whoa, 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 whoa. That looks like a pretty big position coming through. Massive pullback in time, been sitting for a while, and it went ballistic. Is there more in it? Well, of course, that comes back to Bitcoin, which we'll look at in a moment. HSI, it's really just reliant on Chinese stimulus. At this point, to me, around this level is about 50% pullback. It's okay. I would like a 61.8 pullback from the high, which will push around to 19,500. But at this point, it's much harder to predict in terms of smaller timeframes. You've got to think about it is if you're looking at a 12 to 18 month horizon, maybe this is not such a bad price. If you're somebody that's looking at like instantaneous gratification each way, that's going to be a lot tougher. And that's the thing. When everyone starts to look at something, it's not usually that good. Remember, when we've been talking about the high and the lows in China, no one wanted to talk about. Just like with silver just a few weeks ago, there were people in the comment section, you know who you were. You hated the silver. You hated it. I know because you were posting, are you an idiot, man? This is the worst idea ever. Well, turned out not to be the worst idea ever. But the point is that it was so hated. And now all of a sudden people liked silver, then it started doing nothing. Remember, you've got to be that pig, like Druckenmiller said. You've got to think a little bit outside the box. Speaking of outside the box, US 2K, not a bad weekly close. Look at this thing. 22.31. Are we going to see a breakout? Finally a breakout. 22.80. Could we see it? Is this a break of a flag? Well, to be determined, I guess. Still not enough here for US 2K, but we know that 22.80 is a key deal. We know that 24.30 is kind of the next move. So if this market wants to go ballistic and not give any October pullbacks, there could still be 7% on the board after these markets break out. So good first signs here from US 2K, nothing really to go off just yet. NASDAQ, no move. 20,420 is, of course, the second major res. We're not quite there yet. This could also mark a pretty important point. Remember, we mentioned before the S&P 500 often goes a little bit higher, then might have a little correction, and then, of course, move higher after that. Daily 20, by the way, look at this thing. But you can see here, what if we did this? Now, that would make a lot of sense. And of course, it's really within what we've been talking about, the boundaries of the next couple of months. Now let's move over to Bitcoin though. Liquidation Central. Yeah, someone got smashed. And unfortunate for them, but we ended up getting a long leg doji. It held the zone. It's obviously holding above 58, which is a key point. It's not above 64.5 yet, which will really get people excited. That'd be a big point if it manages to get through 64.5. But this is a good first kind of signal here. And it did show, once it broke through 61.4, this was a fairly significant movement. So I think at the moment, if we do pull back here, let's say go back to 61.4, in general, the sentiment seems to be switching a little bit more towards Bitcoin bullish. Of course, look, based on data, we're bullish for the next couple of months. And, it's hard not to be based on data itself. But that's a position. That's maybe an investment. That's whatever you want to make it. Of course, make your own decisions. But from a trade perspective, 64.5 is the key for a swing trader. Now, do remember, guys, in terms of news moving forward, we do have a bank holiday. That doesn't, I believe, mean the stock market's closed, though, so we'll still do the open. Bonds will be closed. This is for Canada and, of course, the US. I believe it's Columbus Day. And then we move down through the rest of the kind of data for the week. There's not that much that's coming out for the US until we get to retail sales on Thursday, 8:30 a.m. New York time. ECB press conference is always a big deal. And then, of course, we have a few FOMC members annoying us throughout the week, which may move the markets, who knows. This is earnings week. This is the kickoff of the big deal. And of course, we'll be covering the stocks that matter during this earnings. Make sure to subscribe, guys. Make sure to follow us along in the links in the description down below. If you're in Sydney, come to the October 30th event. It's free to do so. It kicks ass. It's going to be great to see you guys. And if you're interested in finding out more about replication trades, check out our 7-day flash sale, specifically for the day trading masterclass. Thanks so much, everybody. Have a great weekend, and we'll see you in the next one. Bye for now.